So, welcome everybody to today's session. Well, in today's session, we won't be taking much time. We are going to be talking about trading ranges, and I'm sure we've talked a bit about trading ranges, and I was able to explain some things on trading ranges to each and everyone. But today we will just be practicalizing it, and you would understand more on what trading range is. So let's just dive in quickly and we see what we have. Remember, I told you that trading ranges are not just the type of range that you've been hearing about. Remember, when we are talking about range, we talk about for those who are beginners, we
Papa, sorry. Do, do we have
recorded.
all right, thank you.
So when we're talking about trading ranges, I said for beginners, you might think trading ranges that we are talking about is when we are talking about consolidating markets, right? When we have something like this, price moving up and down. No, that is not the type of ranges we are talking about. Now, when we are talking about trading ranges, we are talking about uh, ranges in a trending market, right? How you are able to pick up your trades and how you are able to follow the momentum. Now, when it comes to trading ranges is a very powerful aspect of trading you need to pay attention to, because I've checked out and I've seen that the majority of us don't even understand what trading range is. So, quickly, in the previous session, I said trading ranges entails what? Your equal highs, your strong highs and strong low, your weak high and weak low. You can still put it as strong high and low, strong low and strong high, then internal range liquidities, and what your what is it called? Swing highs and lows. Now, when we are talking about equal highs and lows, we said when we are talking about strong highs and lows, what I mean by a strong high is an high that swept liquidity and break structure. Yeah, something of this nature. This is what we mean by a strong high, right? This is a strong high right here when we have price sweeping liquidity and breaking structure. Now, at this point, we say we have what? We have strong high at this point, right? We have strong high. Now, when we're talking about a strong low, we literally want to see a low that sets liquidity and what? Break structure. So at this point, you can say we have what? We have a strong low where we can do what? We can buy from, right? But now, when it comes to trading ranges, right? When we are in an uptrend or a downtrend, how are we able to follow the momentum? Now, if we want to apply the concept of trading ranges in a trending market, when we have series of higher highs and lows, we have something like this: higher highs, higher lows, higher highs, lows, highs, something like this, right? In an uptrend market. Now, when we have price in an uptrend, literally we say we have highs and lows up and down like this, right? Now, when we have it like this, you literally know that the top is called what? The swing high. The bottom is called the swing low. So when we have this, how do we form our ranges? Remember how it is done. When we have the low from here, we have the high and we have the low. We want to see price coming to what? Price coming to the downside, which is the low, to what? To tap on it and continue what? Continue whatever is doing, something like this, right? So now, when it comes to trading ranges is very simple. Now, when we are talking about market structure, I also said price needs to what? To break the previous high or low before we can say we are continuing the trend. Take for example, in an uptrend, we have higher highs, higher lows. Now, for us to confirm that we are still bullish, price needs to break past what this previous high that was created, right? Now, for this trading range, we want to see that, okay, let me, for example, from your point A and B, or from this higher low to this higher high, is a trading range. Meaning, if you want to trade, you are expected to trade in between what? In between this point A and your point B, which is your higher high and higher low. Now, look at this point. When price now comes to this point to form an higher low, right, at this point, and a new higher high at this point. Now, another trading range is formed, which is what? This from this point A and this point B. Let me highlight the point A and B for you to see. This is what? The point A, which is your higher low, and this what? Higher high. So whatever thing you are going to be doing, you should know that we are within what? We are in between this point A and point B. So any form of trading that we are going to be doing, it should be what? Inside this point A and point B. Meaning, if you are going to be shorting down or you are selling down the market, you should know that you should be selling from where? From this point A and this point B. That means if you are opening a sell position from this particular point, you should know that you will be exiting before price gets to this point A, because you are in a trending market. So pushing forward, if price should come to this point, creating what? Another higher low at this point, like this, right, and pushing past this previous higher high, then we can say we have a new what? A new trading range, which is from where? This point A and point B. Now that is where we now push forward to talking about the criteria of a trading range. Now, when we're talking about a trading range, we want to see a strong high and strong low, or we want to see a strong low and strong high, and we want to see internal range liquidities. Now, when we talk about strong highs and strong low, you know, I talked a lot of you about the algo structure. This is not the way we want to see price moving. We want to see price moving this way. We want to see price moving this way, right? We want to see something like this. Yeah, this is what we want to see. Price don't just move up and down. So when we have something like this and we want to talk about the trading ranges, right, the strong high and low. Now, before you know that a trading range is formed and we are in a bullish market, if price is moving to the upside, let's say price is moving to the upside this way, right, price is creating series of highs, something like this. Now, if price wants to drop, meaning we have an higher low here and we have an higher high here, before we know that we are due for retracement, price needs to take out what? The previous internal structure that has been created here. I talked about internal structure already. Price needs to take out what? This form of internal structure that is here, something like this. Like this. Price needs to what? To take out. Price needs to take out this particular bottom here. So when price takes out this bottom here, we can say we have what? Price sweeping liquidity and doing what? And breaking structure to the downside. Now when we have this, what do we call this? We say what? A weak high has been formed. Now when this weak high has been formed, look at this. You see that we have sweep of liquidity and a break of structure. So we can say we have what? An higher low here and an higher high. So traders can be looking to what? To start selling from this particular point, which is this. We can say you can start selling from this particular point back into what? Into this particular zone, into this demand or whatever you can call it. right? Price coming down into that point, taking out all the internal form of liquidity, right? Price taking out all the internal form of liquidity at this point. Then after doing that, we want to see that price does something of this nature. Then what? Continue pushing to the upside. Now when we have this, you can see that this particular point, why it's called a weak high, is because at the long run, when price is coming to take it out, when price is coming back, it would actually take it out. Unlike this particular point that we call a strong low, this is what? A strong low. Price taking out this particular point, sweep of liquidity, and what? And a break of structure at this point. This is a strong low. Now I want you to understand something, that if you are in an uptrend, you can only pro-trend or counter-trend. What we mean by pro-trend is if price is pushing to the upside, you should only focus in on buying to the upside, which is something like this. When we say price is moving to the upside, higher highs and higher lows, right? Now when you have something like this, we already know that price is going to what? To drop to the downside after creating an higher high. But now it's not everybody that knows how to what? To catch retracements back into what? Into this demand before what? Continuing to the upside. So if you don't know how to do what? To counter trend, you should only be focusing on what? On buying alone, right? Even though price forms something of this nature for you, giving you what? A weak high, and letting you know that we are due for retracement, you should just what? Focus on buying alone. Now in an uptrend, you should only focus on strong lows, right? Now when we have any form of this, we call them what? Weak high, not strong highs, because at the long run, when price comes back into the weak low, which is what? The lower parts here. I want to try to show this. When price comes into this particular point, you should know that this is what? A strong low. A strong low must what? Sweep liquidity and break structure to the upside. While a weak high must what? Sweep liquidity and break structure to the downside. More like you having your change of character and whatever. And that is how it works. So this is for what? An uptrend, right? Now when it comes to a downtrend, how can we know the strong low and strong high? Now when it comes to a downtrend, look at this. This is how it happens in a downtrend. In a downtrend, you want to see what? A strong high and what? A weak low. You can see when we are talking about in an uptrend scenario, we are focusing on what? A weak low and a strong low and a weak high. But now we are focusing on what? A strong high at this point and a weak low. Because no matter what, when price push back or pull back to the upside, comes into what? Into the strong high, we want to see that price drops taking out what? The weak low. And that is how this trading range is formed. So looking at this, I want to show something. When we have price forming this lower highs and lows for a downtrend, this is what we call a range. From this point to this point is called what? A range. From this black dot to this other black dot is called what? Our trading range. So if you should now see at this point that a weak low is formed, meaning you have a change of character. You want to be seeing price creating series of what? At this point, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. But now look at what happened at this point. Immediately price broke past this what? Lower high. You should know that what? We want to have a pullback to the upside. And what's happened here? We want to see a weak low being formed towards, so that it will sponsor price to the upside. Now look at it, we have a weak high being formed here. Sorry, a strong high being formed here. So you should know that what? We are going to be trading from this point to this point. Then after price successfully takes out all the internal form of what? Liquidity, internal range liquidity. All these points are forms of what? Liquidity. This is what? Liquidity. This is what liquidity. You can call them structural liquidity, high side liquidity, anything. So if price finish taking out all these forms of liquidity, it will what? It will drop. And after it drops, you can now say, okay, when we now have something like this at this point, then price does something like this, now push to the upside again, then you should know that price is aiming towards to come back to the top. So immediately you see this formed, what should come to your mind? That what a new trading range has been formed, meaning we have what from this point, we have from this point now to what? Sorry, you have from this point to this point, and a new changing range is formed. So all the trading that you'll be doing, you should know that when price gets to what? To a premium level or whatever, it will what? It will drop. And now when it drops and creates what? A new lower low, you should know that what? This is our new what? Trading range, and you should be focusing on trading from that particular point alone, making sure you are following what? The other flow. That is just what trading range entails. That is just what trading range entails. I'm sure. Okay, I think we have someone. Let me allow people to speak. So that is what this trading range entails. So quickly, let me show you some examples of trading ranges in my charts for you to see whatever I have discussed with you. I think my chart is inverted. So quickly looking at this, okay, for an uptrend, if we are in an uptrend, look at this, look at the example, look at it. This is what our higher low, higher high, higher low, the high, the low here, the high here. So that is just how you can be able to follow your trading range up. So quickly, let me show you an example of this trading range. I think we should have a perfect example on this particular pair. Though I dropped a signal on this particular pair on the channel, I don't know. I did not really check it back because I don't trade much on crypto. But I think we missed the entry. I'll check back later tonight. We have our entry from this point, and I think we missed. Yeah, we have our entry from here. We missed it. So let me explain this trading range for you right now. So when we can take a look at this, you'll see that we have, this is 1000, what is that pair? Pepe USDT or Pepe or whatever they call it. Now look at this. From this point, okay, everybody can still hear me. So from this point, let me show you this. From this point is our what? Is our high low, right? And this other point is what? This other point is our what? High high. Now looking at this, if you should see this, from where to where should we be trading from? From this point to this point is our high low and high high. So you should know that we want to see a retracement to the downside before pushing back up. Now let me show you the strong low and strong high I just explained when I was talking about this particular trading range. Now look at what happened here. You can see that before price pushed to the upside, we have what? We have something of this nature. We have price sweeping liquidity at this point. Then we have what? We have a break of structure at this point, right? You can see how clear it is. We sweep liquidity, we break structure to the upside, meaning we have a strong low at this point. Now at this point where we want to see the weak high, that would tell us that okay, we want to have a retracement. Look at what happened. Price did what here? Price created something of this nature. We have a sweep of liquidity and what? A break of structure at this point. Now, see what happened. Immediately, price broke that structure at this point. What did you see? We have a reversal to the upside and price dropped what? To the downside. Now, let me show you the continuation. I need to be very fast about this. Now, look at this. At this point here, what would you say and where would you call your next higher high and higher low? Now, look at this point. This is your what? Your low that was created, the higher low. Now, moving forward, where is the next high? Now, this is what? This is the next high here. You can see this is the next high. Oh, sorry. From this point, right? Look at it. Now, looking at this, how did we know that the range is formed? Look at what happened. Price came to this point. It swept liquidity at this point, right? Then what happened? It did what? It broke structure at this point. So automatically this place is a strong low, right? And where is the high? This is the high. Now moving forward, you see that even before price pushed to take out this point, it already retraced and was tapped on a demand and pushed to the upside. So basically, what should you expect from that particular point? We should know that when price is coming back next, we have the low here and the high here. Now, I forgot to add something. When we are looking at a trading range, we should be considering our premium and discount zones. Now, when price gets to your discount zone, you should be expecting a pullback. Now, take a look at this. This is my premium and discount zone. When I mark it out, something of this nature, you should know that if price gets towards below the 50% or the 50% already, it will push to the upside. So moving on, you see that we have our higher low here and the high here. So look at this. Let me show you the strong, the weak low again. Look at what happened at this point, right? Even without much hesitation, you see that price swept liquidity at this point, and it did what? It broke structure at this point. Then what happened at the long run? Price came back towards to tap into this. Then what happened again? Look at this. It dropped. It dropped back into where? Into your discounts. Look at this. Look at what happened. You can see how it dropped, right? Now pushing, where is our new trading range from here? Look at this. Price came back to take out all the internal liquidity. We have a sweep of liquidity here, and what we have the break of structure here. So where is our new trading range? We have our new trading range at this point. From here, from this point to where we have the next point, which is this point. So what are we expecting? Now we're expecting that price would come to what? To take out whatever liquidity and push towards to the upside. But now see what happened. Price just came into this point, right? Price actually came back to that strong low, and what you can see, we got a reaction from there, but the reaction was not good enough, as we had what? A change in trend, right? From that point, you can see how we were able to what? To continue following up with this trend, right? Because of what? The trading range. From this point to this point is a range. From this black dot to the other one, another range. From this point to the other, another range. Now, let me quickly take you through another example. I think I have, is it ID? Yes, I have something on this. Let me quickly show you. Now, this ID USDT, let me show you an example of the trading range, right? Now from this particular point, let's see. Now from this point, this is what the higher high, right? I think the high, we have the low here. Now look at this. This is the high, right? This is the low, right? Now this is what this point is the high. What's going on? Now this point is the what is the high, and where is the low? This is the low. Now where is the next high? We want to see that price will come to what? To take out this point, right? Before we see something of this nature, price pushing into this, taking out this, then we want to see something like this before price drops to what? To this point, and what we push towards, we now push to the upside, and that is how we keep flowing in the trading range, and that is how to follow trends. So I should check out some other examples. Let me check out not crypto now. Let me check out. I took some trades today. I have one on AUD actually. Let me show you people something. Now looking at this, you see that this is AUD USD. You see how clean it is, right? Initially we were in a, let me say, a downtrend. Look at what is going on. We have this lower high here, the low here, lower high at this point, right? We have the low here. But what happened? We're expecting that price. We want to trade from where? Let me use that icon I was using. We want to actually trade from where? From here, I'm coming to this point, right? So basically we know that from this black dot to this dot is our trading range. So if we want to sell next, we should be looking to what? To sell, because we are in a downtrend, to sell down from here, right? Which actually occurred. But what happened? Price failed to what? To break past the previous low, which is this, which means we are not going to continue the downtrend, right? But price break past this point, indicating that we now change the scenario to what? To an uptrend. So from here, this becomes the higher low, and this other one becomes what? The high. So what I actually watched out for was that, okay, where is my new trading range, and where is my strong high and my strong low? Sorry, my strong low and my weak high. This point is a weak high. Looking at this, you see that price did was, look at this two line I drew. Let me delete this. Look at this two line, this first line I tapped on. You can see that that is what? A sweep of liquidity, and this is what? A break of structure. So automatically this becomes what? A strong low for me, and I just opened my position and I waited patiently. Now if you want to add additional confluences to this particular trading range, you can add your trend lines and whatever to it. Now looking to add trend lines, I use this particular chart types. I explained something on the line chart sometimes ago, explaining how you can effectively use it for support and resistance. Now look at this. From this point, look at this, you see the magic I did there. From this point to this point, I just marked out my trend line from that point for a perfect entry, and I saw my other block below. Now look at this, you can see around the trading range, whatever, and my trend line, you can see it gave me a good entry. Some others too, I have plenty of them. I have plenty examples. I don't just want to show a lot of them, a lot of examples. This coupled with trend line and my trading range and all, it's as simple as that. For GBP USD, we have same thing on GBP USD, which I'm going to show you. Now from here, from this particular point where my cross is what? From here to here is a trading range. From this point to this other point, which is this, from here, right? From here to here is my what trading range. And I told you about something on premium and discounts. Let's see if price actually got to the 50% before it started buying. You can see price has gotten towards the premium, sorry, the discount, and it started buying. So now what are we expecting? We are expecting that price would come towards to take out this point. If price can take out this point, right? Something of this nature, like this, then we can say we have another trading range which will be from this point here to where, to this new point, right? So if you are looking to trade, we'll just be looking at, okay, price will drop from that particular point for retracement towards to this point, and what would push to the upside. Now, as price already formed a strong low for us, let's look at it. Let me show you quickly. Let me go to quickly. Yeah, I can see at this point we already have price sweep liquidity at this point. Let me show you quickly. Now look at this. Price already swept this liquidity and what it's moving. So basically, we want to see that price will push to the upside, as I said, taking out this point, then coming back to what, either coming back to around this point and pushing to the upside. So that is just what trading ranges entails. It's just trying to show us how things work, or how to actually navigate this trading thing, how to follow the trend, and how to capitalize on it. So this is where I'll be wrapping it up. Probably tomorrow I'll be sending in some examples, some trade analysis, yeah, some setups using this particular concept. So we'll be able to check them out. So I don't know if anybody has any question or anything to ask before I round up. Do we have any questions or anything, or do we have any announcements from staff SafuLane before I round up this session?
Okay. Thank you so much. Yeah, it was a wonderful one, and I believe we've all learned quite a whole lot of things from tonight's discussion. So what we'll do is, Festus is new to this section, and we have done delivery. Then we have done. Then we have David and Jabir, Safu Queen. Everybody is here. So if you are new to the SafuLane channel, you can try to check the channel and see a link to join our private chat. So when you join our private chat, we would like you to tell us how you get to know about SafuLane, and who invited you to SafuLane. Please do that, so that whoever invited you, maybe one of our SafuLanes, can be recognized and be rewarded accordingly. So if you are referred by someone into the channel, maybe anywhere you've seen the link to join, you can make a screenshot of it when you join the private chat, and we'll follow from there. So SafuLane is a community where we learn together. This is for people that are just joining us, and we share quite good resources and a lot of information with ourselves. So, and this is one of it that we've tried to learn, about trading range tonight. And it's a recorded section, of course. There'll be a few minutes to ask any one of us if there's a question we want to ask our coach, which is our SAFU coach, Crypto Kaba, before we end the discussion for tonight. So this is where I'll be dropping the mic while Crypto Kaba will handle the rest. Thank you so much, everyone. So Crypto Kaba, you have the whole floor to do whatever you want to do from here.
All right, thank you very much. I think I don't have any other thing to share. But I saw a question. Yeah, this particular pattern, no, not consolidation. You can't use it for a consolidating market. You can use it for a trending market. You can't use it for a ranging market or a consolidating market. You only apply this trading range to a trending market, either an uptrend or a downtrend, and that is how you can use it properly. I hope you understand, David. So that is just how to do it. So I think someone is trying to say something. All right. So without any other thing, I think this is where I'm ending up. So we'll be having. I think we'll be meeting on Saturday for the weekly roundup. But before that, tomorrow I'll be sending in some important things. So this should be a good night from me. So good night, everybody. See you in the next session.